repairs shattered bones, relieves depression, restores heart rhythms, helps you back from strokes, and keeps you healthy your whole life. From the day you're born, we never stop taking care of you.
We're the Nigerian brothers. John's been a professional trader for over 37 years, and Pete is one of the country's top 100 traders. On TV, we report on how we follow the smart money from Wall Street's elite, who have the massive resources to get market information before the rest of us. Their unusual option activity tells us what they're starting to trade. Our strategy uncovers why they're trading it and how to follow along for the biggest return. It works on stocks and options. It's the #1 way we choose our trades. Many of you ask, how can you do it too? So we laid out our strategy in our newest book, revealing things we've never revealed. And today we're giving some copies away for free. All you have to do is cover shipping.
Prefer video learning? Get John and Pete's new DVD for free too. Call 1-800-540-7070 or go to followthesmartmoney.com to get your free book and DVD. Call 1-800-540-7070 or go to followthesmartmoney.com now.
You got me speechless from your touch.
Call 1-800-SANDALS.
Ted, going on a trip, huh?
Yes.
Taking the off-road station wagon.
You know it's an SUV.
I know for a fact your SUV does not suck.
Why is that?
It ain't got that vacuum in the back.
We gotta go.
Vacuum in the back. Hallelujah.
Stocks represent actual companies, and those companies can produce solid returns, even if the averages go down. I almost feel silly pointing this out, but in an era where everyone's worshiping the alternative index funds, maybe you need a little reminder that individual stocks can give you individual performance.
Welcome back. Some sad news to report. CNBC has confirmed that Mark Hurd, CEO of Oracle, has died at age 62 from an undisclosed illness. He stepped down on September 11th, just before Oracle's annual Open World Conference, stepped down to deal with health issues. And Mark Hurd, really a defining CEO for a time of upheaval in big tech. He was the CEO of HP before he came to Oracle, leading that company at a time of transition after Carly Fiorina had left that company after a large acquisition of Compaq, and questions about the direction of the PC business and whether the large tech conglomerate could survive. Mark Hurd, known for watching the numbers very closely, also a consummate salesman who was able to lead that company back into Wall Street's good graces. He was pushed out, did resign over issues over expense reporting, but Larry Ellison, the co-founder and CEO at the time of Oracle, called HP letting Mark Hurd go the biggest mistake by a corporate board since Apple let Steve Jobs go. And Mark Hurd had been leading HP as CEO alongside Safra Catz. Larry Ellison still serving as executive chairman. Unique background from Hurd. He did not come all the way up through Silicon Valley. Before that, he was at Teradata, a CEO in the Midwest, but one who was able to really focus in on big data as a trend, on appliances, big iron as a trend, saw that very closely and used that to really lead in a new era in Silicon Valley, focused on data. So he was at Teradata, which is part of NCR, at NCR before that. Just quite a towering figure in Silicon Valley, controversial at times. I mean, he could be tough, not universally loved, but respected for his leadership and his sales ability, guys.
Yeah, of course, he made his appearances here on this show with Squawk Alley as well. Our thoughts and our prayers go out to Mr. Hurd's family and certainly to Oracle and the Oracle team overall.
We'll be thinking about Hurd and talking about his legacy, as John said, one of the giants in hardware for sure over the past quarter century and more. Let's get to the judge and the half.
All
All right, guys, we appreciate it. Sad news indeed. I'm Scott Wapner. Welcome to the Halftime Report. Front and center this hour, why another bull run could be in the cards for stocks, even as the S&P now tracking for its best year in 20 years. It is good to have you with us on this Friday. Our investment committee at the table today, Joe Terranova, Jim Lebenthal, Josh Brown. Shannon Sakosha is here, the Chief Investment Officer at Boston Private Wealth. And Rob Sechan's back of UBS Private Wealth Management, one of Forbes' top 100 financial advisors. And Tom Lee, the Fundstrat Global Advisors Managing Partner and Head of Research. And we do want to start with the markets. S&P just about 1% away now from a new high. Earnings season's been pretty good thus far. And Tom Lee, the man who rarely wavers on his positions in the market, 31.25, we can exceed that. So
yes.
Why do we have more upside here? We've been kind of stuck in the mud a little bit.
I think the stock market's been really resilient this year because in the face of what is very scary macro developments, curve developments, political risk, we've hovered near highs and actually, up almost 20% year to date. Going into the final 10 weeks, there's a lot of favorable factors. I mean, we've got seasonals. We normally get a Santa Claus rally. There's a ton of cash on the sidelines. We saw that with the Merrill Lynch survey, record cash positions and big underweights in equities. And I think economic momentum is actually going to start turning. So I think that's the message coming out of 3Q earnings, and I think that's why cyclicals are rallying. And a turn in economic momentum is going to be a risk-on scenario.
Right. Let's debate this as a desk, okay? It's a bullish call. The market, by and large, has not done much in 18 months. I said we're about 1% away on the S&P from a new high. Why is Tom Lee going to be right? It's not about the call itself. It's about why it's going to be right or wrong.
There's one reason that you're going to be right, and I hope you are right, and it's because the trajectory on the China-U.S. trade front has turned positive over the last week. However, Tom, if you don't have that continue, you'll be wrong. Sorry, you just will. I hear you on the bottoming of leading economic indicators on ISM surveys across the world, possibly bottomed, but they won't bottom unless you get that continuation of what started last Friday. Now, let me be clear about one thing. Continuation does not mean a straight path forward. It will be 2 steps forward, 1 step back, but that net 1 step forward is what matters.
What happens if the Fed is not as accommodative as the market seems to think it's going to be? You could make, I think, a credible case to this point, whether it's our own Steve Leisman's reporting that suggests a pause is coming, whether it's in October or after. Some of the Fed speak goes along the lines of rates are in a good place. The economy doesn't need a rate cut. Clarida today moving maybe a little more towards neutral from dovish. That's not necessarily a scenario that the market would take kindly to. In fact, the market looked like it gave a little bit up on those breaking headlines from Leisman.
Yeah, there's a lot of risk to, I think Jim's dead right, the trade issue. And the Fed last year was a big problem for markets. I think the difference is, I think the Fed is paying more attention to market signals. The curve is still messed up, so I think it's necessary to see some further easing. But you're right, if the Fed pauses, it's going to raise some questions. And then, we have 10 weeks to work with. Last year, December was a bad time for a policy error, and it destroyed a lot of years.
So, Shannon, give people the read on what are we supposed to do for those last 10 weeks?
Well, I think, there is evidence that if you look out over the course of the next year or so, one of the things that we need to be looking at as part of the earnings season is what are multiples doing? So, as much as, you can get some gains in bottom line EPS growth into a stock price, it's really about the multiples. And so if we feel like there is evidence that we're starting to see a bottoming in some of this economic data, and that's trending towards positive multiple expansion, then, that's something that we can be buoyed by against a backdrop of uncertainty around trade and against a backdrop of the Fed. I mean, I think that's why this earnings season is so important, despite the fact that we obviously have seen a deceleration in earnings growth. This multiple expansion is really what we need to be looking for.
Earnings thus far have been pretty good. RBC today says the valuation problem with the S&P has gotten worse. They say Citi does. The concerns are piling up, and they point to sentiment. And kind of Tom Lee said there's a lot of money on the sideline. Mm-hmm. It's not necessarily, you're going to wake up one morning and that money, Rob's going to find its way into the market. Sentiment is somewhat negative.
But it is.
Is Tom Lee right?
He is, and what he outlines.
You're bullish too?
No, we're underweight equities in the very short run because we think these headline risks are going to dominate, whether it be the Fed, more importantly, trade, some of the things that Jim said. But that's the base case. I think the upside case, the one that can be made, is that positioning is way off sides, okay? And in this growth and inflation paradigm, if you have, which is pretty positive, you have low inflation, it's the disinflationary forces of technology that have gotten us here. I think it's structural. And in this type of environment, you can have higher multiples. There's no question that historically we've traded at 20 times. So what gets investors and hedge funds last month, I think you may have seen this performance statistic, they were up 50 basis points. The S&P was up 1.7%. They are clearly underinvested. If you look anecdotally across our client base, we are clearly underinvested. All pullbacks have been shallow. Modestly good news has been met with buying.
Why are you underweight? Why are you underweight U.S. equities then?
So I think that the political motivation to get a deal is not present currently. It may be present soon, but it's not present currently. And I do think that the market's a little offsides as it relates to the Fed. The market is definitely pricing in a Fed cut. You had Sternlicht on here this morning talking about everybody, the smart money that talks about this, I think acknowledges we don't need to cut absent the market pressure. You're pushing on a string almost at that point. So you're reacting to what's happening abroad.
When did you move to underweight U.S. equities?
Week ago.
Okay.
Week
so
and a half
very
ago.
near call.
Very near
recent call. Debate. Far sides of the table. Underweight U.S. equities,
in the short run.
overweight U.S. equities.
In the short
what's the
run.
short run? I mean,
Short
more
run
than 3
is
days.
the intermediate term.
20 minutes.
6 months.
And get bullish.
Think
6 months.
Think actually 3 months. Next year, I think first quarter we're going to start to see
But this
some
year's
positive
shot. The
development.
rest of this year is shot.
We think we are basically where we're going to be at year end, and the upside opportunity is not near as significant as the downside risk at 17 times.
Josh Brown, first crack. You got opposite views on opposite sides of the table. So who's right?
Well, they're both much smarter than me.
Who's going to be right?
I don't know. I can't figure out all the trade stuff and is the political will there. that's like way above my level.
Are you underweight U.S. stocks?
No. I'm going to tell you what's going on with price because I think that's the truth. The ITB, which has been leading the market all year, looks incredible right now, up 4.3%. These are home builders. You cannot tell me we have an economic problem in an economy that's 70% consumer-based when those stocks are rocking and rolling. Lennar and PHM, Pulte Homes, are the two best charts in the group, by the way. Then take a look at REITs in general. Away from home builders, actual real estate. IYR, right now as I'm speaking, is making a new 52-week high. It's less than 1% away from an all-time record high. So you take a look at homes, you take a look at real estate. Now let's look at the consumer writ large. 3 of the best charts in the S&P 500, Costco, Target, and Walmart. Look at all 3. No flies on any of them. They look amazing right now. They've made people money all year, and they continue to move higher. Lastly, I want to point out banks. We could be on the verge of the breakout that this desk has been talking about is imminent for at least 3 or 4 years now. Take a look at XLF, 2870. That's resistance. If we get above that level, and it looks like we want to, things could start moving very quickly. And these are widely disdained stocks, way undervalued. Most of them trade at book or less. So you've got this combination of the retailers that serve the consumer. You've got real estate. You've got home building. And now you've got the financials. And you're telling me you want to be materially underweight a tape
No, I
with
didn't
this
say that.
bubbling witch's brew of positivity?
I mean, that's a pretty.
I don't want
That's
to.
a very impassioned case to make for somebody who at the outset said, I don't know this or I have no opinion.
Well, I don't know when the trade war is going to be resolved. How could I?
You know what? Neither does anybody else, but you have a prevailing view on
So
you
next,
just made your case.
No, Mira.
You just made the case.
The rhetoric about trade seems like it's good right now. Tomorrow it could seem like it's bad. A tweet could go out where, hey, we're about to paper this thing on Monday. I have no idea. Why would I represent to anyone that I can figure that out? I cannot.
That's not really what next week we have tech earnings coming in mass. And I think what you have to try to understand is whether this trade news has actually started to spill over into the real economy already.
It has.
So
What do you mean whether it has? I mean, the evidence is already there. Of course it has.
If that starts to really impact the technology companies, right? I think there is going to be this ebb and flow around trade, and I think it's going to be an ebb next week if we have that type of news. Now, longer term, investors underweight equities, this stuff clears up. They're coming back. Okay? I don't think we're headed into a recession. I think that is completely misplaced for all the things that Josh said. The housing market's strong. Labor participation rates are great. Consumer is earning. Consumer is healthy. There is a longer-term bullish story, but it's just not here yet.
Record-setting flows into money markets. While all of that price action I've just described is happening, record-setting flows into cash.
Let's put stakes in the ground, okay? Things to look for, because notwithstanding Josh's well-made comment that we don't know, the market always is looking forward to something. The APEC meeting in mid-November, okay? That is the next signpost in terms of clearing up the trade issues that Xi and Trump are going to meet, and they've got to get something done. Phase one, whatever that mini trade truce, whatever it is, has to get done there. I'll give you another signpost. Next week, you're talking about technology. Josh was mentioning financials as an unloved sector. So is industrials. Stephanie Link and I spoke about this earlier this week. Caterpillar comes out Wednesday. All right. The earnings are going to be terrible. Anybody who's thinking the earnings are going to be great is not paying attention. What matters is how does the stock respond? If you get a positive response, that tells you what you need to know about sentiment.
Hi, Scott.
Hi, Joe.
How are you? Good to see you. Tom,
welcome to the table, Joe.
Yeah, I know. January, you sat with us. You said the market will be up double digits. I said to you at that time, 10% or 20% makes a big difference. Congratulations, you got to 20%. Now you're asking for another 4%. I think you get the other 4%. Why? The Federal Reserve for the entire year has been the catalyst, the hand underneath the market. The U.S. consumer, to Josh's point, continues to go out and spend. We've reached your 20% target without the participation of technology. Except for Apple, we can't get a FANG name to approach a new all-time high. Look at Netflix. I left this desk on Wednesday. We talked about potential earnings. I know there's a lot of excitement surrounding Netflix. Netflix is lower than where it was on Wednesday. So if we, in fact, are able to get some participation from some of these FANGs, if Amazon is able to reclaim some of that strong momentum, you're going to get your 4% because we are at 3,000 despite all these headwinds.
He's not going to get his 4% if you don't have a trade deal and the Fed decides to pause in October.
Federal Reserve, the Federal Reserve and the consumer are incredibly important to the equation of getting another 4%. I agree with you on that. As far as a trade deal, I disagree. You don't need a trade deal before the end of December to get another 4%.
I'm saying if you
can't escalate though.
If you don't have a deal at the same time that the Fed makes its pause, he's not getting his 4%.
So
I'm just going to say that. Maybe I'll be wrong, but
you're
not getting your 4%.
You're getting your 4% as long as the Federal Reserve, which is the key ingredient here, does not reverse.
Right, you agree with me.
I would agree with you on the Fed.
I just said both. If you have both happening at the same time, no deal, no Fed cut, you have a problem, right?
You have a problem.
Okay. It took forever to get there, but I knew we were going to get there.
Wrong flight.
Are we going to mention the Brexit stuff? Because there is a school of thought that potentially it puts the Fed a little bit in an easier situation if Europe is not going to will itself into some sort of a depression over this issue. And I'm not saying that's like directly what the Fed is making decisions on, but I do think that's been a source of some of their consternation as they look at the global picture. I'd love to hear Tom's thoughts on that.
Yet another issue that's hanging out there in the face of your 3125 and beyond.
Yes, I mean, I think that everything you guys talked about, including Brexit, are potential sort of snaggles on the thesis. But I actually think it's possible the Fed could pause and we still blast to all-time highs. But it's because the U.S. is decoupling. I mean, that would be the only way to explain it. And I think that's why the builders and the financials are on a tear. We're entering a really strong period for seasonals, and if it is, then I think people have to rethink this bearish thesis. And then, of course, if hedge funds put money to work, that's going to be part of the FANG rally. I mean, that's their A shelf that they'll turn to when they go risk on.
What if hedge funds say, you know what, 20% S&P, I'm good. I'm going to think about skiing. I'm not going to think about trying to traverse the moguls of this market.
Yeah, I think, this year, I think a lot of our growth long-only managers are in that position where they have a lot of house money because they're ahead of their benchmarks. I think a lot of hedge funds would like to take advantage of that 10 weeks if there's a risk.
I agree with Tom on that. They've underperformed dramatically. And if there's some incrementally positive news, I think they're in a chase. I think it's some of the traditional...
But you've gotten out of the way. You're confusing me.
No. Let me be clear. We're underweight global equities. We've moved rebalanced to neutral in the U.S. We are not underweight U.S. stocks. We're underweight global stocks. Now, there's an argument to be made on the Eurozone that it's a deep value play and there's an opportunity there. We don't agree with that. So our underweights are in the form of underweight non-U.S. equities, mainly in the Eurozone.
Bernstein says buy the most hated asset
and spread.
Go overweight Europe. That's a call from Bernstein today. How about that one?
We've been
It's hated. It should be loved.
We've been underweight equity since March, but it's been in the small cap space. So we're equal weight, both international large cap and domestic large cap stocks. We think that the international play, we've always felt like there was, as long as we got a deal that was more supportive towards Europe, I really actually don't care as much about what the UK stocks add to my portfolio. I think the European situation right now, we've seen some bottoming in European economic data. We've seen the ECB become increasingly more accommodative. And I think if you're looking at potential opportunities, I think that you should be looking outside of the United States. If we continue to see a run up, we could see people start to take money off the table here in the United States if we get a 20 plus print this year. And I think that there are opportunities to own similarly strong companies in that just happen to trade on a European exchange.
Let's look at the market literally at this very moment, okay? Market's fallen apart a little bit, losing some steam for sure. Things have changed a bit since we started on the air. Dow's down 170, lows of the day. Everything's at the lows of the day.
I changed my mind.
No, but it's being driven by technology.
Why is that?
Well, again, I think a lot of it has to do with the inability for Netflix to positively respond after earnings, and it's falling back below where it was.
But you didn't have the fangs in your pocket to begin with.
How about
you need them now?
You didn't, but you had the hope that you were going to be carried forward by some of the fangs. That's a critical part of it.
Josh has a question.
Yes. How about an attitude adjustment and a sentiment shift, given that the new rescue plan for WeWork, which 3 weeks ago was allegedly worth $47 billion, to now value the company at $8 billion. If you're in one of these similar situations, companies that have recently come public, and you have anything at stake there, or you own stocks that you're worried could be thrown into that bucket mentally, you're seeing liquidation in almost all of the technology names that had come public in the last 18 months.
I think that's a point
right
that
now.
Mary made.
Listen to this. Is he ready yet? Patty, he's ready? Throw up shares of Boeing as well intraday, because there's some potentially damaging news for that stock that's breaking right now. Our Phil LeBeau is going to join us for a news alert on that. What do we know, Phil? I see it here on Twitter, but you tell us exactly what's going on as we watch shares of Boeing here.
Well, this is the kind of story that ahead of Dennis Muhlenberg testifying on Capitol Hill later this month, this is the kind of story that people are going to look at and they're going to say, what's going on here? According to Reuters, citing an FAA letter that we're in the process of trying to get our hands on, apparently the FAA administrator, Stephen Dixon, is demanding an explanation from Boeing regarding a delay in recently disclosed 737 MAX documents. We're not going to go all the way into this, but among the documents, according to this Reuters report, is some text messages or instant messages between employees that were discovered some months ago that were just now being delivered to the FAA and to investigators. And in those messages from some months ago, it is suggestion of 2016 that there was a suggestion employees were discussing issues with the MCAS flight correction system in the 737 MAX. So, guys, this is the kind of smoking gun document that at first blush, it looks like the FAA is saying, why didn't we know about this sooner? Why are you just now turning over these messages to investigators if you discovered it months ago? And we're trying to get a few more pieces of information from the FAA, the DOT, as well as investigators.
And that employees, may have misled the FAA about it.
Right.
The issue as well in the stock is we're watching it fall apart. There's your issue. In the market right now. This accounts, by the way, that the Dow is weighted. Boeing's accounting for almost 90 points.
And
I think
Scott,
we're close
this
to
is
that as we watch the stock at the lows of the day. Just excuse me 1 second, Phil. Down 3% now. As you were talking, the stock was sliding. It's now at the lows. It's down $11. 3%.
And Scott, it's the drip. Yeah, it's the drip, 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 drip. And the headline here, and we're waiting to see what we hear back from the FAA officially. But if the FAA is just learning about this, and Boeing knew about these messages several months ago, I mean, this gets to the heart of what people have been complaining about, which is, what did you know? When did you know it? And when are you going to be forthright with that information? If you're waiting several months, and we have not talked with Boeing yet, and we're still waiting to hear from the FAA, if in fact they did wait several months to reveal these messages, I mean, that is at the heart of the complaint that people have about Boeing and its analysis of what went wrong as they were getting the 737 MAX ready for certification.
What's equally as incredible, I think, Phil, is we've watched this whole thing play out. You've watched it closer than anybody. Is the stock's ability to hold up through everything.
Right.
It's been unbelievable that all this cascade of bad news, and it's been such a drag.
Yeah,
and as you said, the drip.
The reason the stock holds up. Have we seen anybody cancel a large order yet? Have we? No. Because if you're an airline, as frustrated as you are, and look at the comments from Gary Kelly, the CEO of Southwest, back when they reported Q2 earnings. I mean, he was furious that they continue to wait for this plane to be recertified and back in service. They're losing millions of dollars. All of their customers are. But yet, we've yet to see anybody cancel a large order. And that's what investors are banking on. Investors are saying, look, it's delayed cash flow. Somewhere down the road, these planes will be certified and flying again, and deliveries will ramp up. And that's what investors are banking on, which is why this stock is held up.
Okay. Phil, we appreciate it. You jump back on with us the moment you have something else. We appreciate that from Phil LeBeau out in Chicago. Got two owners of the stock here. Shannon, you first.
Yes. I mean, obviously, disappointing news that would be the case. As shareholders, we certainly want Boeing to be as forthright as possible and move this along as quickly as possible. But the duopoly nature of this industry creates, I think, a floor on the stock. We have great cash flow, despite some of the hiccups that we've seen over the last several months. And I think that if you're looking to hold a long-term position to an industry that remains consistently tied and correlated to a burgeoning middle class and a stronger consumer, I think Boeing's an industrial way to play that thesis.
This is the sort of news, Scott, that obviously moves the stock down, but I think it will bounce back, and here's why. What this news ultimately means is that CEO Mr. Muhlenberg is done. If it's true, okay? If this is true, he is done. He is, whether you call him the sacrificial lamb or the criminal party, he's done. But what Phil said at the very end is the punchline. These planes will get back in the air. It's when they get back in the air that matters. Boeing's going to report next week. We need a firm update from them as to when they think the planes will get back in the air. One follow-up on that. Yes, the FAA is a regulatory body. They are also part of the political system, and they know this is the largest exporting company in America. This is a huge part, as you mentioned, of the Dow. It's a huge part of the economy, of industrial production. There are other forces at work here. If the plane is safe to fly, and it will get back in the air, and that's what matters.
You're suggesting that the replacement of the CEO is an automatic positive. You made that case, not me.
Yeah, well, let me be clear about what I'm saying. If these allegations are true, he's done. I mean, I don't think we have to discuss
that. You said that the stock's going to get a pop.
What I said was the positive is getting the plane back in the air. Now, they're going to report
earnings. We always knew the planes were going to eventually get back in the air.
But here's the problem.
We didn't know that there was a potential, as Phil termed it, a smoking gun document that cast doubt on what the company knew and when it knew it.
Separate issue over here.
Not for people who own the stock, it's not.
In the last 20 minutes, it's an issue. It won't be a long-term issue. I'm not worried about this issue next week. First off, we don't even know if it's true, okay? So we don't know. There's a lot of opinion. Secondly, if it is true, heads will roll, and that's how it gets dealt with. It doesn't change the dynamic of getting these planes back in the air.
Does it increase litigation liability?
It probably does. That's manageable.
It is?
Yes.
Anybody else have a take? Do you have a take
I think
on
this is absolutely a very important stock for the Dow 30 because it's price weighted, and so Boeing is one of the bigger weightings in that index.
That's why I suggested that's why the Dow is down.
Right, so it wouldn't statistically it wouldn't drag the S&P 500
points.
Statistically, it wouldn't drag the S&P 500 down to the same extent that it would take the Dow down. However, I do think that, people look at a very big, liquid, high-profile stock like this, and they've been waiting for a recovery for a long time, and they say, oh, there's another shoe dropping. And I think it just adds to, look, the volume is very low today across all the exchanges. And the thing I said about technology stocks, high-growth, high-valuation technology stocks being sold off, whether willfully or because of redemptions, I do think that's a real dynamic at play as well. So maybe combine the two things, and that's where we are.
Okay, so let me let me wrap things up with Tom Lee, if I could. I'm writing this list down so I can read it to you as we end this. Of all of the issues that your optimism potentially has to deal with, Middle East conflict, the geopolitical stuff, the consumer continuing to hold up in the face of some retail news that was disappointing, possible impeachment proceedings, hearings, whatever you want to characterize that as over the next many months. A Fed that's not as accommodative as the market wants it to be. Trade war that this lingers on with no overwhelming solution. Earnings growth, which is negative. It may be a little bit better than people expected, but expectations were underground. You get where I'm going,
yes.
Right?
Those were in the basement.
That's a long and powerful list.
We should maybe wait until there's no more Mideast conflict anymore. So like in 5,000 years, we'll get both.
I'm just, you know where I'm going with
that. All those are real issues.
That was not in any particular order, but thank you very much for fining on that.
I'm just breaking your chops.
I hear you.
These have been issues. They've been known, as you pointed out, all year and have weighed on the markets. That's why we've been stuck for 20 months. I think what's changed in the past 20 months is now the change in really embedded belief in the market that we're topping. So now I think people think we're late cycle. And as a consequence, a lot of cash has been raised. So to me, what really will break through all of that is positioning. Because if we're talking about a market that doesn't break down and we're record cash and underweight equities, the resolution is a break to the upside, which since World War II is really how these markets going nowhere have resolved. 3 or 3 times average gains. 51%, that's 4,500 for the S&P in 2 years. I mean, we're talking massive potential upside.
It's how you, from a probability standpoint, assess the removal of the negatives, which allows positioning to change in markets to climb.
I understand, but then removing the negative of trade could be a question mark for many months ahead.
It can be, but I think it's about incremental progression. As long as you don't see us fall back from this incremental progression, I think that trade does not push us into a recession. If you see a major, it's trade is really all that matters right now. I know we can talk about the Fed and everything. The Fed has acted with a very thoughtful playbook. I suspect that they will continue to act that way. So it's about trade, and if you see this this flow versus an ebb, I think that that's going to be a positive. I just think it's delayed a little bit. I think the negative news is going to stay in the headlines a little bit longer, and I hope it doesn't spill from business confidence, where we're seeing slowing in business investment, to consumer.
What about that? I mean, in the face of 3 stocks today downgraded to underperform, Macy's, Gap, L Brands over at Credit Suisse. As I said, the retail number most recently was not good.
Yeah.
You worried at all about the consumer?
Yeah, I mean, the consumer so far is good, and I don't know where they are 2 months from now, and they are affected by the media. You know, like when the curve inverted, it was national TV and people talked about it. But I think that the investment world is much more convinced we're topping. You know, like we tell our clients, I think people carry 2008 hammers and are looking for 2008 nails.
I agree with you on the overhang of 08, but that's never going away.
Yes.
Every upset is the next 08.
That's right.
It was a hot stove.
Can you blame us?
But in the meantime, you know, labor markets are healthy.
Not us, but
the people who think that.
I don't buy the argument that Macy's, Gap, and L Brands are in any way, shape, or form representative of the consumer.
Oh, I don't either. I just brought those up as stocks today that are in the market news. I hear.
Conceptually,
I don't either.
If it were 1997, I would say, what's going on with Gap and L Brands? Because for every negative, idiosyncratic story you can find in retail, I can find you one positive. So you can throw Gap up and I'll throw Lulu in your face. And again, getting back to what I said, the 3 most important retailers, leaving Amazon out, Costco, Walmart, and Target, which is where people actually buy things, are on fire. And I would way rather focus my attention on what's happening with those names and the fundamental trends there than anything in the mall.
I would say that if you don't believe that some of this negative corporate sentiment is going to continue to bleed into the consumer and that we're entering a deteriorating economic condition over the next 12 months, given the lack of alternatives, I don't know why you'd be underweight equity.
That was what Barry Sternlicht, I think, said today. It was a relative fixed income call, and I think it was very well put. he said that he actually think cap rates, can come in a little bit because interest rates are so low. That means prices can perform in real estate still, even at these very low cap rates. I thought that was incredibly interesting, with one of the most prominent real estate investors in the country saying that, okay, real estate's a very healthy asset class for all these underpinnings. And you know what? We're going to pay more for it. That's a big deal.
All right. We'll make that the last word there. Tom Lee, it's good to have you as always.
Yeah, great to see you.
Thanks for coming over, sitting with us at the table. We have much more halftime straight ahead.
This CNBC program is sponsored by Payden and Regal, offering global investment solutions.
Interactive Brokers pays 1.4% on idle cash in your brokerage account. Do you know what your broker pays? Most U.S. brokers offer nominal interest in their brokerage accounts. Move your account to Interactive Brokers and start earning interest.
Let's hide in the attic.
No, in the basement. Why can't we just get in the running car?
Are you crazy? Let's hide behind the chainsaws.
Smart. Yeah, okay.
If you're in a horror movie, you make poor decisions. That's what you do.
I'm being quiet. Breathing on me.
If you want to save 15% or more on car insurance, you switch to Geico. It's what you do.
Artificial intelligence is about sensors. Devices become remotely machine addressable, whether it's vibrations, temperature, and then we can apply machine learning and solve classes of problems that were previously unsolvable. 10 to 20 years out, we're looking at highly censored human beings. Devices attached to the heart in the cerebrum that will do everything from monitor blood chemistry to allow people to communicate almost telepathically. This is the...
Get the brands you love at littlewoods.com. Whether you use it for studying or streaming, find the Asus Chromebook 11.6-inch in grey for just $199.99. All with inclusive delivery and free returns. Hurry, offer ends 25th of October. Own it. Shop now at littlewoods.com.
Whether mending fences in the Highlands or on a building site in Cornwall, there are thousands of hard-working Ford commercial vehicles in the UK. It's why we're truly the backbone of business. And now we'll give you £1,000 off the recommended retail price if you test drive and purchase a vehicle during our Backbone of Business dealer event from the 11th to the 21st of October. That'll really get your business moving. Ford commercial vehicles. The backbone of business. Search Backbone of Business to learn more.
At participating dealers, exclusions apply.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Dozens of worshipers were gathered in a mosque in eastern Afghanistan to offer Friday prayers when a mortar round fired by insurgents blasted through the roof, causing it to collapse. At least 25 people were killed, 50 more were wounded. Anti-government protesters clashing with police in Beirut. Nationwide protests have paralyzed Lebanon as demonstrators blocked major roads in a second day of demonstrations, the largest in 4 years. This over the government's plan to impose new taxes during a severe economic crisis. Johnson & Johnson recalling some 33,000 bottles of baby powder in the U.S. after health regulators found trace amounts of asbestos in samples taken from a bottle that was purchased online. Its stock is down more than 4% on the news. And some sad news to impart. Oracle Group's co-chief executive officer Mark Hurd has died. The business software maker announcing last month that Hurd would be taking a medical leave but did not give any other details. He previously was chairman and CEO of Hewlett-Packard. He was 62 years old, and we just have a release from Larry Ellison, and he says it's with a profound sense of sadness and loss that I tell everyone here at Oracle that Mark Hurd passed away this morning. Oracle has lost a brilliant and beloved leader. All of us will miss Mark's keen mind and rare ability to analyze and simplify and solve problems. I will miss his kindness and his sense of humor. And having interviewed him a number of times when he was at Hewlett-Packard, he was a wonderful person, great sense of humor, and a pleasure to interview. The halftime report returns in just a moment.
Heading into retirement, you want to follow your passions rather than worry about how to pay for long-term care. Bright House Smart Care is a hybrid life insurance and long-term care product. It protects your family while providing long-term care coverage should you need it. So you can explore all the amazing things ahead. Talk to your advisor about Bright House Smart Care. Bright House Financial, build for what's ahead.
I am totally blind, and Non-24 can throw my days and nights out of sync, keeping me from the things I love to do. Talk to your doctor and call 844-214-2424.
Your skin has different needs at night. That's why there's Gold Bond Overnight Lotion. Works while you sleep, penetrating 10 layers deep as hyaluronic acid locks in moisture. Wake up to rejuvenated looking skin. Gold Bond Overnight Lotion.
In a changing environment, consistency keeps us on track. Columbia Threadneedle Investments.
Sometimes the pressures of today's world can make it tough to take care of yourself, but Nature's Bounty has innovative ways to help you maintain balance and help keep you active and well-rested. Because hey, tomorrow's coming up fast. Nature's Bounty, because you're better off healthy.
ServiceNow put our workflows in the cloud. This changes everything.
You're right, sir. Everything.
No, not everything. I mean, you're still blatantly sucking up to me, Gary.
Brilliantly observed, sir. Always 3 steps ahead. 6 steps ahead. 16. So many steps.
You done?
1,000,000 steps ahead.
Let's look at this again.
ServiceNow. Works for you.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
Welcome back. Options traders are making big bets on a big gaming stock. So says Pete Najarian from Minneapolis with his latest trade today. Hey, Pete.
Hey, how are you, Scott? Yeah, it's pretty interesting today because we're seeing in Caesars, Scott, some very interesting call buying. MGM also has been active, and you've heard me talk about Wynn and some of the other names, Las Vegas Sands. But today at Caesars, that really stood out. 5,500 of the November 12 calls were bought today. Now, they paid just 26 cents for these, Scott. Very, very short time frame. We're talking about less than a month, or call it a month, for these to actually perform. But they're virtually right at the money calls, and they're only 26 cents. So risk reward, I love these kind of trades. We get any kind of a move to the upside out right now out of Caesars, these actually could double very, very rapidly. And then if that happens, we'd probably be taking off half. So that's something to keep an eye on. I'm going to give you also an update on Bank of America. Now, Bank of America was a stock on August 15th we talked about because they were reaching out and they were buying the October 28 calls for 70 cents. Stock was trading $26.60 at the time. Well, actually, after earnings and everything else that's happened this week with all of the different financials moving to the upside, those have gone from 70 cents to well over $2. They're we're trading about 220 today, 240 I think on the high end. So that's something I'm giving that update because otherwise those will turn into stock. I think a lot of people would want to just take that money off and then go to the next trade. So I'm just reminding on that update. I'll give you one last thing that you didn't hear about, but I'm going to give it to you now. MPC, Marathon Petroleum. Now, that one was going to be an unusual option activity yesterday for me. It's hitting again today, and they just keep on buying, Scott. So keep an eye on this name. We've talked about it many, many times. It's hit many, many times. Monstrous January 72.5 call buying today in there as well.
All right, Pete, good stuff. You want to comment quick on hang on real quick because Jim Lebenthal has talked about Marathon. As you know, he has comments.
Yep. Look, the refinery sector has a lot of things going for it, including the new maritime fuel oil rule. Marathon in particular has this activist argument, whatever you want to call it, with Elliott Management. That's gonna win out for shareholders' benefits. I'm long the January 65 calls, just so you know, Pete. So giddy up.
You're a good man. I'm along the stock and the call, so I'm looking for some giddy up out of this MPC.
All right, good stuff, Pete. Have a good weekend. We'll see you next week.
All right, man.
Thank you. Coming up, we're going to answer your questions. Ask Halftime is straight ahead. You still have time to reach us as well. Go to cnbc.com/halftime or tweet us. We'll be back in just 2 minutes.
Front seats. Back seats. Actually, more back seats. The versatility of available third row seating in the new Discovery Sport. Land Rover, above and beyond. The new Discovery Sport with ClearSight rear view mirror. Land Rover, above and beyond.
You might take something for your heart, your joints, or your digestion. So why wouldn't you take something for the most important part of you, your brain? With an ingredient originally discovered in jellyfish, Prevagen has been shown in clinical trials to improve short-term memory. Prevagen, healthier brain, better life.
I'm happy to give you the tour. I love doing it. Hey, Jay.
Jay? Charlotte.
Oh, hi.
He helped me set up my watch list.
Oh, he's terrific. Excellent tennis player.
I recognize that voice. Annie? Yeah. She helped me find the right bonds for my income strategy.
Very popular around here. There's a birthday going on.
Carl, he took care of my 401k rollover.
Wow, you call a lot.
Yeah, well, it's my money we're talking about here. Joining us for karaoke later?
I'd love to, but people get really emotional when I sing.
Help from a team that will exceed your expectations.
Live from the NASDAQ market site. Access. People talk about the presidency.
Power.
You went through the ringer.
Influence.
So what's the economy look like from where you sit?
The most powerful business show on the planet. Squawk.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
It's going to be a bit chilly today. And with the worst of winter yet to reach London, you don't want to come home to a broken boiler. We're with you. So that's why with British Gas Home Care, we've got your boiler covered 365 days a year. We have thousands of engineers on hand to help get your boiler up and running again, and all from just 46p a day. Buy selected home care products online by the 28th of October and get 1 month free. Search British Gas Home Care. Conditions apply. Prices vary by postcode.
Welcome back to the Halftime Report. I'm Phil LeBeau with more details about why shares of Boeing are down more than 3% following a letter that was sent by the head of the FAA to the CEO of Boeing. This is a copy of the letter. I'm not going to get too detailed in it, but it basically says Steve Dixon wants Dennis Muhlenberg to explain A document that Boeing turned over to the Department of Transportation yesterday. The document, according to Dixon, is troubling, and they want an immediate answer to the content of this document and why it's just now being turned over to regulators and investigators. That document basically shows instant messages between Boeing engineers discussing the certification process for the 737 MAX back in 2016. According to the FAA letter, they're concerned about the messages there. We haven't gotten a copy of those messages yet. We're in the process of getting those. So, guys, Boeing has two problems here. One, they may have known about this for several months and are just now turning these documents over to the FAA and to the Department of Transportation. And two, those messages themselves. What were the Boeing employees discussing about the 737 MAX certification process? According to Reuters, some of those messages suggest that they talked about misleading the FAA. One other note, guys, we have reached out to Boeing. We expect to hear from them shortly regarding these documents, or this document that has now been turned over to the DOT as well as the FAA.
Phil, let me just come back to you for a second. I'm not sure how much of the conversation you heard after your prior hit with us. Jim Leventhal suggested if all of these reports are true, that Dennis Muhlenberg couldn't survive something like that as the CEO. You just want to talk to us around that?
Well, I think that these are the types of damning documents. And it's not just the documents, Scott, that would make people say, can Boeing go on with Dennis Muhlenberg in charge of the company, or do they need to change him, take him out of that job, or do they need to remove Kevin McAllister, the head of Boeing Commercial Airplanes, from his job? It's not just the document. It's the fact that they've known about it for, a couple of months? We don't know the exact time frame, but if that's the case, if that is true, that they knew about this and are just now turning it over to investigators, I mean, that's one of those kind of, if you're on the board, you have to ask yourself, who's making the decisions here about what we turn over and how forthright we're being? So I think Jim's comments, he's not going to be the only person asking whether or not Dennis Muhlenberg's future is long at Boeing.
Let's all remember, I mean, what are we talking? Only a week ago at the most, where they split the role of chairman and CEO?
Right.
It's not like they haven't discussed these sorts of, or even taken action on issues around Mr. Muhlenberg's title leading up to all this.
You're absolutely right. You're absolutely right. It's clear that the board realizes it needs to be more actively involved, not only in what happens next for Boeing, but in determining how it's going to set a new culture at this company. I mean, this document, if it's true, it gets right to the heart of the concern that we've heard time and again from people when they talk about Boeing, which is, what do they know? Why are they not telling us more? And what's going on when it comes to certification of airplanes?
Well, Phil, you can walk right around the river and you can go to their headquarters and ask them, because they are in your town.
Well, we've reached out. We'll be there. We'll be talking to them.
I know you will. All right, Phil, we appreciate your reporting very much. Thank you. That's Phil LeBeau, as I said, in Chicago. All right, let's answer some of your questions now. Joe, I come to you first. From Adam in Massachusetts. I shorted FedEx 1 week ago. It's been up every day since. What should I do?
He didn't watch the show on Wednesday, October 9th. We dealt with this. Bernstein downgraded FedEx at the time, took the price target from 201 to 153. We said do not trust it. It was not a short there. It is not a short now. I don't know necessarily that you take the other side and go long. I think this is a position that you just wait with, and the stock trades sideways between 140 and 160.
Okay, Jimmy, from Ruffin in Washington, D.C., CVS or Walgreens?
Yeah, very simple answer, CVS, and simply because they now own Aetna, the insurer. It makes them a vertically integrated, holistic, bear hug around the consumer type of company that Walgreens just simply does not have.
Okay, Shan, to you from Elijah in North Carolina. Your thoughts on Merck?
Yeah, pharma's a tough space right now. We eliminated Pfizer earlier this year, but we still like Merck. We think that they have a good late-stage pipeline. We believe that they have first-mover advantage in immuno-oncology, and we think that a lot of their patent issues are behind them. So we would hold this one, albeit at a lower weight in pharma across our overall portfolio.
Okay, TRB, lastly to you from Stan in New York. Viacom, would you buy it at current valuations?
No. This is the worst run
company in what is about to become the most highly competitive industry. Their streaming, whatever, is DOA. Stock is trading at the same level it was trading in 2009, and their prospects are significantly worse going forward. There is no equity whatsoever in MTV, Nickelodeon. These things are all dying brands. The app's not going to be a hit, and maybe there'll be some M&A. Here is the only saving grace, but this stock is about to break below 20, which was the low in 2017. It bounced from there. If it doesn't bounce from there this time, no reason why it couldn't be $15. I want nothing to do with it.
Can you give us your hot take now?
That's my hottest take.
Yes, it is. All right. Thanks for the questions. Let's do our call of the day plus final trade straight ahead on Halftime.
There's golf. And there's the golf lifestyle. Shop with Golf has everything you need to go from the drinks to the links to the boardwalk and the boardroom. This is the sweet spot for the moments you love and the looks you'll love even more. Because golf's more than a game. It's a lifestyle. Live the lifestyle at shopwithgolf.com.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why investors own the bonds we insure. Assured Guarantee, a stronger bond.
Stocks represent actual companies, and those companies can produce solid returns, even if the averages go down. I almost feel silly pointing this out, but in an era where everyone's worshiping the alternative index funds, maybe you need a little reminder that individual stocks can give you individual performance.
There are rivals, and then there are these two, the birds and the boys. Buckle up. Eagles, Cowboys, all eyes on Sunday Night Football.
Is your credit card debt stressing you out? Take control. A personal loan could help you crush high interest rates and reduce your monthly payments so you can get out of debt faster and save money. Whether you're a credit stud or a credit starter, at Credible.com, we help you find great rates from multiple lenders. In 3 minutes, get actual pre-qualified rates. Have the money you need as quickly as tomorrow and start living your life.
Visit Credible.com to see how much you could save.
At Tommy John, a lot goes into our underwear before you do. That's because we know that there's a science to comfort. So our technicians have done an amazing job of developing the most comfortable underwear on the planet.
When we say stretch, we mean 360 degrees of stretch that supports your body in 16 different directions.
Our Stay Put waistband stretches with you, doesn't dig in or roll over.
That means that there are no wedgies ever, and that's guaranteed. Try Tommy John for yourself. And if you don't love your first pair, you get a full refund. That's TommyJohn.com.
Welcome back. Domino's Pizza right there. Shares down a bit today, but named Guggenheim's best idea. They cite free cash flow, long-term sales drivers. They raised the price target to $310. We've made it our call of the day. Joe Terranova, you first.
I don't own it, but I think eventually they will be right. The third-party delivery is the obstacle right now. They're going to have to spend a significant amount of money overcoming that headwind with marketing. Eventually, they will gain traction and momentum, but I think that happens more in 2020.
Our unofficially official restaurant correspondent. What do you think about Domino's here?
Shake Shack.
First mover. I mean, they've been at the forefront of sort of the technology move in the food biz.
Yeah, it's okay. The one technically that I think is set up better, believe it or not, is Papa John's. Company's been in the penalty box for a few years because of unfortunate remarks that the founder had made. But now Shaquille O'Neal is involved. Stock had a triple bounce off the $40 level. Chart is starting to turn up. The 50-day is now positively sloping. This one is starting to build some momentum from a very, very low level. This was a $90 stock a few years back, and now you can buy it for half that. So I like this chart better than Domino's, but I think both can work.
Okay. Let's look ahead to next week because there's some good companies that are reporting some very big names. Jim Lebenthal, Caterpillar. Okay. Downgraded today, by the way, at Morgan Stanley. You've mentioned this stock multiple times this week.
Yeah, and interesting, was downgraded this morning. 2% down in the pre-market, but is positive, or at least the last I looked is positive. And again, Scott, to what we were talking about earlier, and Stephanie Link and I were talking about earlier this week, this is about sentiment. I'm sorry, I see it's down a little bit now, but
you
still,
own it.
I do own it. I do own a meaningful position in it. I'm not expecting great earnings. I'm not expecting even great guidance. The question is,
well, that's
this
a really
stock
fun place to be.
I know, but this stock has been priced for a recession, which is a comment that Shannon made.
This party's going to suck, but I'm still going to go.
Well, no, I think,
never know,
no,
Judge.
I think you've got to say what's priced into the stock. What's priced into the stock is a recession. I just don't see a recession coming.
Anybody else have a take on Cat? No?
Meow.
Gone. Okay, next, Microsoft. They report next week as well on Wednesday. Microsoft.
I think the expectations here are big, though.
Got to be big, given the stock has done.
I think people are bulled up on this name, so I hope they have a good number. I don't see why they wouldn't, but it's not like this is an undiscovered gem.
They could have a good number and the stock could still go down.
True.
Yeah.
You own Microsoft.
I do. I'll stay with it.
Good number and the stock could still go
I
down. That's
think
the
you could,
biggest risk at this point because of the move in the stock into the number?
Yeah, I think Josh is right. The street is overwhelmingly long on this one.
I think this has been a tech hideout. As you've moved out of FANGs, you're looking for a sustainable business. They've been executing very well. We love the name, but there could be a little bit of disappointment.
I think this falls into the category of what's worked seems to be like it's going to continue to work, because any tech companies that have managed their strategies well actually have profits, have done really well. I think they continue to do well. Haves and have-nots in tech land.
Okay. Just want to note, because we've discussed it so often on the show today, Boeing does report next week as well on Wednesday, so that's going to be a potential big day for that company as the news continues to come out regarding that story that Phil LeBeau is following. Chipotle got upgraded today at Bank of America. They report on Tuesday.
Give me a miss so I could get back in. I don't want.
Are you looking to get back in?
I would get back in. Yes, I'd get back in, but I needed miss for that. I think the one that's incredibly interesting next week is Amazon. I mentioned the other day 4 consecutive quarters where the stock price responded negatively to whatever the earnings were, and then had to spend the following quarter kind of recovering the loss from the earnings report. So if you are able to get finally an Amazon report where you see positive price action thereafter, I think a lot of people are going to come back into that name, and I'll be one of them.
Ford on Wednesday, Amazon on Thursday, Twitter. Josh Brown on Thursday.
Yeah, I'm going to make that my final trade today, too. When you've bought the stock on these dips into the 30s, typically you've been okay. Stock gets back above 40. I really feel like at a certain point, and it could be this earnings report, there will be this awakening on the street that Twitter is going to be a $1 billion per quarter revenue run rate company, and there are not a lot of them in this space. And I think valuation is reasonable given what they've been able to do on profitability.
Verizon on Friday, Amazon, as I said, on Thursday. Shannon, you own Microsoft, Boeing, Amazon. This is your week.
It's a big week for us. As I mentioned, I'm a little bit concerned about the expectations for Microsoft. We like Amazon, although we don't have an outsized position there. And Boeing is certainly we've bought a couple of tranches of Boeing, so we would like to see some positive sentiment out of that earnings report.
Okay, let's go around the horn and do final trades. Robert Sechin, good to see you again.
Thank you.
What do you got for
us? A lot of heat in private equity valuations, so I'm going to tell everybody that markets are adjusting right now.
Let's explain it a little bit more. Multiple people on this desk have suggested today that it's the biggest bubble. That's what they said.
I couldn't disagree more. I think in the venture space, there's some accuracy to that. In the PE space, it's a little different. While multiples paid has climbed, there's a tremendous amount of cash flowing to the asset class, and institutional investors invest based on expected return. And as long as private equity with their leverage characteristics can outperform, it's going to be a great asset perspective.
Josh, your Twitter, you already said that, right? Shan, what do you got for us?
JP Morgan, we've had a lot of the financials report, still the best executing company, I think, in the money center banks, and we love the stock.
Okay, Farmer Jim.
Boeing, I think I've said enough on it. Boeing.
Verizon reports Friday. It eventually takes out the October 99 62.30 high.
I like that. I'm in too.
And Verizon? All right, we'll see what happens. Dow right now down 185. Does it for us. Have a great weekend. The exchange starts now.
Thank you, Scott. Hi, everybody. Here's what's ahead. We have the shocking new developments that are sinking Boeing stock at this hour. The latest details, a look at what it could mean for management and more. There's also another trade fight that's front and center today. This one's with Europe. The U.S. moving forward with retaliatory tariffs on planes, ironically, and on foodstuffs. Is it the wrong fight at the wrong time? We'll explore that as well. And no preset course here. That's what the Fed's vice chair said today. We'll tell you what the last major remarks before the Fed goes quiet mean for a rate cut later this month. But we do begin with these markets. Boeing pushing the down significantly. I should say, Seema Modi at the NYSE. Seema?
Yeah, that's exactly right, Kelly. Boeing accounting for about 40% of the losses on the Dow. A slightly different tone from yesterday when we saw the S&P 500 break above 3,000 on that Brexit optimism. But today, all the major indices pulling back. It's the Boeing news combined with that weaker than expected GDP report out of China, weakest pace of growth in nearly 3 decades. And that's really resurrected this conversation on which stocks and sectors have most exposure to that global slowdown, particularly in China that we're seeing. And top of mind really are the industrials. Keep in mind, in recent quarters, profits earned by U.S. industrials in China have been softer than expected. And next week, we have reports from United Tech, 3M, Caterpillar, all set to put reports. So that'll give us a clear indication of how they're performing in the region. Earnings worth noting from a handful of industrials this week from Honeywell, Fastenal, Kansas City Southern have been relatively upbeat. But third quarter estimates for the broader sector have come down since July, Kelly, from 6% profit growth to just 0.9%. But it's the trifecta of the stronger dollar, tariffs, increasing manufacturing costs that has really raised the question as to whether these estimates are too high going into these reports next week. The Dow below 27,000. We're at down 182, just off the lows of the session right now. Kelly, back to you.
Okay, Seema, thanks very much and welcome everyone. I'm Kelly Evans. We begin with our top story today, which is Boeing shares sinking on reports that the FAA is concerned it was misled about the safety of the 737 MAX. Philip Bowe is live in Chicago with the very latest. Phil, these shares down 4%. It's the biggest move we've seen in some time for Boeing.
And Kelly, it's the concern of the FAA is not just that it potentially was misled during the certification process for the 737 MAX. The other concern is that documents that are just now coming from Boeing, but being turned over from Boeing to investigators on Capitol Hill, they've been known about for several months, and they're just now being turned in. That's according to the FAA. Boeing just issued a statement to us regarding this document dump and or being leaked from investigators on Capitol Hill. Let me run you through everything, Kelly, in terms of what's going on with the discussion about Boeing and these documents. Yesterday, they turned over a document to the Department of Transportation. In that document, allegedly, the documents show that there are instant messages between a Boeing employee or a former Boeing employee and another Boeing employee about the 737 MAX certification process. We're still waiting to get those actual messages. That was just turned over. According to the head of the FAA, they are concerned, and he has sent a letter to Boeing CEO Dennis Muhlenberg about the fact that this was known about for several months, and it's just now being turned over to investigators. So, as I mentioned, we are getting the statement from Boeing. In fact, I think we do have it now. I'm not sure if we have it to put up. It says, over the past several months, Boeing has been voluntarily cooperating with the House Transportation and Infrastructure Committee's investigation into the 737 MAX. As part of that cooperation, today we brought to the committee's attention a document containing statements by a former Boeing employee. We will continue to cooperate with the committee as it continues its investigation, and we will continue to follow the direction of the FAA and other global regulators as we work to safely return the 737 MAX to service.
Phil, stay right there. We want to bring in David Gellis right now. He's a writer for the New York Times who joins us on the Newsline. And David, your reporting is shocking here. I just want to make sure everybody is aware of what you have to say. You said it was a Boeing pilot who lied to the FAA about 737 problems. I want to read a little bit from your piece so our viewers are aware of what you're talking about. A pilot named Mark Faulkner back in 2016 said a new automated system was making the plane difficult to control in flight simulators. In a message, he said to a colleague, quote, "Granted, I suck at flying, but even this was egregious." What more can you tell us? What have you learned at this hour?
Well, Kelly, this is explosive. I mean, I've been covering this story for months now, and this really feels like it is one of the pivotal developments. And I think we shouldn't miss the forest for the trees here. Yes, when the DOT and the FAA and the DOJ all learned about this document is important. But what's essential is that this was the chief technical pilot on the 737 MAX, who months after requesting that the FAA take mention of MCAS out of the pilot's manual, is now acknowledging to a colleague in instant messages from a hotel room, it seems, late one night, that this very system was making the plane difficult to control. And so the premise on which so many people have been operating, which is that Boeing, frankly, had no knowledge that MCAS could ever do anything like that, it starts to show real cracks in its foundation when we see text messages like this.
David, I also want people to be aware that one of the messages, this chief technical pilot for the plane says, quote, "I basically lied to the regulators," and then in parentheses he says, "unknowingly." What do you think he means by that?
Listen, we're not inside his head yet, and we haven't heard from him exactly what he means. So I think we need to be careful not to read too much into what he's trying to communicate with that unknowingly. But like I just said, months before he sent these messages, and months before it looks like he's experiencing these problems in the simulator, he had requested that the FAA take mention of MCAS out. So we can, again, I'm hesitant to infer too much, but we know that he had made the case to the FAA that MCAS was so benign that it didn't need to be included in the pilot's manuals. Now we have him months later recognizing that, whoops, this thing can actually move the plane in unexpected and potentially uncontrollable ways.
So, Phil, I want you to respond to this because this is extremely damaging, it would seem to me.
Sure.
Coming from the chief technical pilot of the 737 MAX,
yeah.
Is this plane ever getting back in the skies if it's found to have these fundamental flaws that were covered over at the time?
Completely separate question, Kelly. And I say it's completely separate from this standpoint. They are in the process of redoing the software for MCAS. Theoretically, when this goes through certification, you know that the FAA regulators are going to go through this certification far differently than they did back in 2016. So theoretically, they're going to make sure more than 100%, if at all possible, that this software in the MCAS system in the 737 MAX functions as it is supposed to function and that pilots are prepared for it in flight. That's different than what this document and what David was talking about, which gets right to the heart of what he was saying, that Boeing for a long time said, look, this is going to be in the background. Pilots won't even notice it. When you have the chief technical pilot saying, basically I lied to regulators unknowingly in an instant message to another employee, I mean, that gets to the heart of what people have said for some time, which is, look, you misled people about MCAS when it comes to the 737 MAX.
David, also we have to talk about the timeline here. These messages are from 2016. Reuters, I believe in the Journal, are reporting that Boeing knew about these messages months ago. They were disclosed yesterday, this is now from your reporting, to lawmakers on Capitol Hill in advance of hearings, ironically, that the CEO will be, where he will be testifying about these crashes for the first time. So does this now contradict what we've previously been told by CEO Dennis Muhlenberg?
I think the broader point is just what you say. This could not really come at a worse time for the company. Boeing has been working feverishly to try to get these planes back up in the air. It's cost them $8 billion already. It's cost airlines hundreds of millions and countless thousands of canceled flights. We've seen the ramifications on companies including Southwest and Ryanair, which are having to scale back operations as this thing drags out. And just at the moment when it looks like Boeing might be getting close to the finish line, everything we're hearing is that maybe these things return to service at the end of this year or possibly the very beginning of next year. Here we have these explosive text messages, again, coming just weeks before Dennis, for the first time, is prepared to confront lawmakers about this crisis, which I have to say, they have been asking him to come for months. He has repeatedly postponed and declined, And so the fact that these are coming out right before his testimony, I think means that we're going to have a very interesting showdown on the Hill in a couple weeks from now.
Real quickly, David, can you confirm that Boeing did know about these messages several months ago?
My understanding is yes, that Boeing has been aware of these messages for several months, but that's correct. Only provided them to the DOT, the Department of Transportation, late last night is my understanding, and to lawmakers on the Hill earlier this morning. I'll hasten to add, though, that does not include when they may have provided them to the Department of Justice, which of course is conducting a criminal investigation. And some of my sources are telling me that the DOJ had this document well before this week.
Interesting. David, thank you so much. We appreciate it. Great reporting, obviously. Appreciate you joining us. David Gillis of the New York Times. Phil, if you don't mind, stick around for just a moment. We are going to speak with an analyst about this and about the share reaction. This is the worst day since August 14th for Boeing and the worst week for them since July. Jim Corridor is on the phone. He's an analyst at CFRA. Jim, the analyst community has largely shrugged this one off because, frankly, the shares have as well. I mean, they're down, I think, about 20% from their highs. But as the scope of this gets worse, the performance has held up relatively well. Why the drop that we're seeing today, and should it be worse given what we've learned?
I mean, first of all, obviously these developments are still coming out. We don't know exactly what the text message just said. And it seems to be a conversation between the chief technical pilot and another pilot. If it is true that he felt that he was misleading the FAA, why are there not messages between him and Boeing, him and the CEO, him and the rest of Boeing that show him saying, hey, this plane is not safe? There doesn't seem to be any paper trail linking his misleading feelings with actual actions and pointing this out to the rest of the Boeing executive staff. So we don't have that, number one. And number two, as Phil rightly pointed out, this is a pass backward look. We're assigning blame here. The ongoing thesis on Boeing is the plane going to come back in service? And we believe it will. Will it be safe when it does? We believe it will, because it will be the most scrutinized emergence of a plane in history. And will Boeing be able to normalize operations sometime next year, start moving deliveries, and start selling some of these planes again? And we think that they will.
Jim,
so we
in
think
fairness,
the stock will eventually come back.
The timeline has already slipped now to February, according to Southwest yesterday. If the timeline continues to slip, then this notion that the plane is coming back in service gets further and further away, not to mention this again undermines its confidence with the flying public. I understand what you're saying, that people will go, oh, it's going to be the most tested plane of all time. But this is a big setback for Boeing. What if this plane never gets back in the air?
Yeah, that's a completely different thesis. If the plane doesn't come back into the air, then we're talking about Boeing's existence, its ongoing operations. They have a huge billions of dollars tied up in development, in costs, in its backlog. All that would disappear. It would be a calamitous if the plane never comes back into service. But we reiterate that that's not something that we think is a possibility.
Okay, Phil, one thing that Jim mentioned, he said, if this was true, why wasn't there a paper trail between this pilot and Boeing executives? Well, you know, the guy is exchanging clearly casual messages with a colleague. It's not clear he wanted or intended to alert people about what was going on here beyond just kind of half joking about it, frighteningly, with a colleague.
All great questions, Kelly, which raises the bigger question when Dennis Muhlenberg goes to Capitol Hill now for 2 days, October 29th and October 30th. Will this chief technical pilot be subpoenaed by some of these committees to, hey, we want you to testify as well. We want to know who you told and why they didn't bring this further up the food chain in terms of alerting everybody that there's an issue with MCAS. So I wouldn't be surprised if you find out at some point when they announce who's going to be appearing at this hearing that the chief technical pilot will be there. Or will there also be Boeing board members? And the reason I bring this up, Kelly, is because long ago, me and other reporters, we continually ask this question of Boeing, why don't you bring in an outside investigator? Why don't you bring in somebody and they can say, we're going to do a full cleansing of what happened with the MAX. And I said, at least that way you can say, we have somebody who's independent looking at this. Yeah. And time and again, Boeing said, nope, our board has made it clear that we're going to investigate this. We have the right people to look into this. Well, if that's the case, and if this document was known about months ago, and it's just now being turned over to the DOT and to the FAA, I mean, that raises serious questions.
And finally, Jim, you maintaining your $406 price target on Boeing, or does that have to come down?
No, I think that this will normalize over time. Obviously, this is a backward look. This is about assigning blame. We think the most likely circumstance that comes out of this is maybe an increased fine for Boeing, as it has to acknowledge that mistakes were made in the MAX development. But in terms of the going forward thesis on Boeing, like I said before, this plane is going to come back into service. It's going to be safe when it flies. The flying public will eventually come to realize that, and Boeing will be able to normalize operations and the stock price will recover, we think.
Okay, Jim, thank you, sir. Jim Corridor. Boeing shares right now are, and Phil, thank you so much as well. We really appreciate it. We'll see a lot more of you as you continue to follow these developments. Phil LeBeau in Chicago for us. Boeing's around $355 a share right now. It's near session lows, down 4%, and it's taking about 100 points alone off the Dow, which is down just under 200 points at this hour. As I said, the more headlines we get on this, the more we'll bring them to you. In the meantime, we'll talk about the earnings rally that really start to roll out next week, I should say, including one key sector that could have a make or break moment for this market. Plus, we also have a slew of downgrades in the retail sector today. Are we seeing the cliff before Christmas? But first, tariffs on $7.5 billion worth of European goods kicking in today, ironically, because of our fight over Airbus. In the meantime, our trade dispute with China goes on, and the Chinese economy is taking a massive beating. We'll talk about all of that next.
This is The Exchange on CNBC.
Imagine a workplace that acts like an operating system, constantly evolving with you so your team can work smarter and happier. The future of work is understanding the power of connecting space and people. WeWork can design, build, and activate your perfect workplace. Connecting space and people can change your company's world, so your team can change the world.
It's been years since my last eye exam, but this year, my VSP individual vision plan will help me save on exams and glasses. Get an extra $20 to spend on featured frame brands when you enroll today at VSPdirect.com.
Lots of chatter out there about the sleepers, surprises, and the favorites.
Well, there's a time for talk, and there's that time we call show me time.
That time is now.
The biggest companies in the world are set to report.
And nobody breaks down the numbers like we do.
Who's up?
Who's down?
Who outperformed predictions?
And met expectations.
We don't just deliver the what.
We explain the why.
It's about performance.
And opportunity.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487 and 50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Welcome back to the exchange. Tariffs on $7.5 billion worth of European goods because of a fight over Airbus, ironically, are kicking in today. This is our trade dispute with China seems to be worsening their economy. China's third quarter GDP just came in at the lowest level in 30 years, and that's based on what they're telling us it is. For more on the trade battles, Fred Kemp is here. He's CEO of the Atlantic Council and a CNBC contributor. Dan Griswold also joins me. He's Director of Trade and Immigration at George Mason University's Mercatus Center. Fred, listen, it is sort of somehow emblematic that we're having this fight with the EU over its subsidies for Airbus and its state support for that. At the same time, we're learning about deeper problems with Boeing. So that might not be either here nor there. But what does the fact that we are moving forward with these retaliatory tariffs on the EU mean as far as you're concerned?
Well, first of all, this is absolutely the wrong war, the wrong time. And even Trump administration insiders and loyalists, both past and present, are scratching their heads this week, both about these EU tariffs and the situation of abandoning our Kurdish allies in the Middle East. In both cases, what you're doing is you're mistreating or disregarding, or the very worst, betraying allies at a time when your own administration, its national security strategy, has said it's a new era of major power competition. So this should be a time where you're settling disputes privately and through negotiations with Airbus and Boeing. It would seem on the face of it, through the EU decision, tariff decision this morning, that Boeing would be the winner. But that's not going to be the case, because several months down the line, pretty soon, there's going to be retaliatory action from the EU against Boeing.
Right.
And so the winner is going to be China, because this duopoly, these two big plane makers, ultimately are going to be competing with Chinese competitors. So they're kicking each other at a time when they really have to think about the rising competition with China.
Dan, do you agree with that? Is our skirmish with the EU in terms of this new kind of fight with them over trade going to ultimately benefit China?
Yes, I agree with all of that. This is totally unnecessary. This is crying out for negotiations. You know, this case has been going on in the WTO for 15 years. It's very complicated. Nobody's hands are clean. We subsidize Boeing, and the EU is going to be retaliating next year with tariffs. These are just punitive tariffs. You know, it's ironic that we have higher tariffs on basic consumer goods from Europe that are going to hit the American middle class on wine and distilled spirits and cheese and clothing. We're hitting the Scotch producers in the UK really hard when we're going to be on the verge of trying to negotiate a trade agreement with them. So we're just alienating our friends, not moving any closer to settling the problem of subsidies for airliners. And everybody does it, of course, the Chinese, the Canadians, the Brazilians, as well as the Americans and the Europeans. And we have a large enough global aviation market that both Boeing and Airbus can prosper. Boeing needs to fix its internal problems. This is an unnecessary fight.
Yeah, and as you both mentioned, Boeing could be hit with retaliation on that front next year, which would be another headache for them. Fred, you mentioned Syria. I just want to briefly mention what we heard from Turkish President Erdogan this morning, who said he was offended by the president's letter to him from earlier and will respond in due course. Now, there's been conflicting messaging on the Turkish side and on the U.S. side as to what's really happening in terms of the ceasefire. Boil it down for us from the market's point of view. Fred, what is going on here?
Well, I mean, from the market's point of view, there is a way that the U.S. could hurt the Turkish economy worse. But if you're going to do that, you don't project it quite in the way that President Trump has done. You can cost yourself all leverage. What we really have done is ceded a lot of territory without gaining a lot in return to Russia and Russia's influence over Syria. If U.S. troops pull out of there entirely, you really have lost your leverage on this. And the ceasefire agreement that was with Turkey really gives Turkey the 20-mile buffer that it wanted. I also just want to add one other thing to the trade question, if you don't mind.
Sure.
And that is, you know, it is still the most important trade relationship in the world. So as we go to a global slowdown, some of us still remember the negotiations over the transatlantic trade and investment partnership. That could be revived. It is the kind of deal the Trump administration is said to want, which is bilateral. You negotiate bilaterally with the EU. It's worth 64% of all global outbound foreign direct investment. It's worth 51% of all global consumption and 1/3 of global GDP by purchasing power parity. So this is a huge win sitting right in front of you that would fit into your competition with China. And I think people just don't understand why the president wouldn't take this opportunity, both for global growth and a big win going into an election.
Okay, guys, I'm sorry we don't have more time, but great stuff from you both. Appreciate it. Dan Griswold, Fred Kemp this afternoon. Coming up, we'll talk to the man who helped Silicon Valley get you addicted to technology, and he says he's ready to give you the recipe to set you free, and he'll explain why it's also your fault that you can't put your phone down. That's ahead. Speaking of tech, take a look at shares of Netflix, which are down nearly 6% now. The company reported 2 days ago and missed its subscriber growth target for the second straight quarter. Again, the shares were up as much as 10% yesterday. They gave up a lot of that today. They are giving up even more. We're back at 2.
There's golf.
there's the golf lifestyle. Shop with Golf has everything you need to go from the drinks to the links to the boardwalk and the boardroom. This is the sweet spot for the moments you love and the looks you'll love even more. Because golf's more than a game, it's a lifestyle. Live the lifestyle at shopwithgolf.com.
The amount of student loan debt I have, I'm embarrassed to even say.
I felt like I was going to spend my whole adult life paying this off.
Thanks to SoFi, I can see the light at the end of the tunnel.
As of 12 p.m. today, I am debt-free.
We have no debt, we don't owe anybody anything, and it's fantastic.
Ameriprise wants to know what's important to you.
Saving for Ava's college.
Being able to retire on our terms.
Taking care of Dad.
Why Ameriprise Financial?
My advisor cares about my personal goals.
He gives us comprehensive advice.
I feel prepared for what's expected in life and even what's not.
She helps us feel confident.
We know our financial future is secure.
With the right financial advice, life can be brilliant. Ameriprise Financial.
Having an idea for a business was easy, but without the right team and the right tools in place, it's just an idea. That's why I use NetSuite.
NetSuite is the world's #1 cloud business system. Schedule your free product tour right now at netsuite.com/grow.
What is love? 2 hearts, 1 soul. It's the journey and the destination. It's vows made and promises kept. Feed your hunger, quench your thirst, live your dreams. Call 1-800-SANDALS.
Belle, Vern, I'm off to college, and I'm not going to be around. I'm worried about my parents' retirement.
Oh, don't worry.
Voya helps them to and through retirement.
Dealing with today's expenses.
Like college.
While helping plan, invest, and protect for the future.
So they'll be okay. Without me?
When we knock out this wall, imagine the closet space.
Yes! Oh, hey, son.
Yeah, I think they'll be fine. Voya, helping you to
and through
retirement.
Welcome back to The Exchange. Some very sad news to tell you about today. Oracle co-CEO Mark Hurd has passed. Let's bring in John Ford with more on Mark's legacy. John?
Yes, Kelly. Hurd went on medical leave just 5 weeks ago to focus on his health, and we are sad to report he has died at age 62. Hurd was a defining CEO for a time of upheaval in big tech, a hard-charging salesman who valued numbers and efficiency over sentiment, and he got results. He rose from relative obscurity first to stabilize